You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Tuesday, April 2nd, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com, and it is the top 5 things to know in the market on Tuesday. The first is Bitcoin briefly spikes above 5,000 in a sudden surge. What's Bitcoin? Bitcoin briefly rose above 5,000, its highest since late November. On the Luxembourg-based Bitstamp exchange, Bitcoin rose as much as 20% to touch a high of $5,080 before pulling back to $4,780 by 5:45 a.m. Up almost 16% on the day, that's still the biggest one-day gain since April of last year. It was not immediately clear what was behind the rally. It comes after a massive slump for the cryptocurrency market last year. Bitcoin fell over 76% in 2018 and is still well below an all-time high near 20,000 it notched in December of 2017. The second thing to note today is oil reaches fresh 2019 highs. Crude oil prices rose to their highest level of the year amid signals that OPEC-led production cuts, as well as U.S. sanctions against Iran and Venezuela, have helped tighten an oversupplied market. U.S. West Texas Intermediate crude futures were up 41 cents, or around 0.7%, to $62 a barrel. That's after hitting $62.03, the most since November 8th. International Brent crude oil futures were at $69.43 per barrel. That's up 39 cents, or roughly 0.5%, having earlier touched $69.50, the highest since mid-November. The American Petroleum Institute is due to release its weekly report for the week ended March 29th at 4:30 p.m. Eastern Time, amid expectations of a decline of about 1.1 million barrels. The third thing to know today is there is a Brexit impasse. British Prime Minister Theresa May is chairing an emergency cabinet meeting in Downing Street in an attempt to plot a course out of the Brexit mess as she comes under pressure to either leave the European Union without a deal or ask for an extension to the revised April 12th deadline. May's deal has been defeated 3 times by the lower house of the British Parliament, which failed again on Monday to find a majority of its own for any alternative to her deal. If May cannot get her deal ratified by Parliament, then she has a choice between leaving without a deal or asking the EU for a long delay to negotiate a Brexit agreement with a much closer relationship with the bloc. Parliament has Parliament also has the right to revoke unilaterally the UK's decision to leave, although it rejected that option last night. Over the last days, a no-deal scenario has become more likely, but we can still hope to avoid it, EU's chief Brexit negotiator, Michel Barnier, said at an event in Brussels, adding the EU was ready to accept Britain staying in the EU's customs union, or a relationship akin to the one the EU has with Norway. Sterling last traded at $1.3069, down 0.2%. The fourth thing to know today is U.S. futures point to a subdued open. On Wall Street, U.S. stock futures pointed to a subdued open after rising on Monday in response to strong manufacturing surveys in both the U.S. and China. The Dow futures were flat pre-open, while the S&P 500 futures and NASDAQ 100 futures were a tad lower pre-open, at least at some point. Elsewhere, European stocks tread water in mid-morning trade, following their strongest two-day rally since January among national indices. Britain's Explorer-heavy FTSE rose about 0.4%, helped by a weaker pound. Earlier, shares in Asia closed broadly higher. And the fifth thing to know today is U.S. durable goods data is up next. The Commerce Department will release data on February durable goods orders at 8:30 a.m. Eastern Time. That's out. The consensus forecast was that the report would show orders for durable goods fell by 1.1%. Maybe we'll see those numbers in a moment. Core orders, which exclude volatile transportation items, are forecast to rise 0.3%. The report came after data on Monday showed U.S. manufacturing numbers for March were better than expected, helping investors overlook soft retail sales data for February. The dollar index was up about 0.2% at 96.96 after hitting a three-week high of 97.04 earlier. In the bond market, long-term yields pushed further above short rates after dipping below them briefly last week in response to fears of a possible recession. 10-year Treasury yield was last at 2.48% compared with a 3-month T-bill yield of 2.42%. Our second story today comes by way of CNBC.com. Analyst slaps a $42 target on Lyft, 42% below its IPO price, says buying it is a leap of faith. Shares of Lyft fell for a second straight day after an analyst raised concerns over the ride-hailing company's valuation. Seaport Global Securities analyst Michael Ward initiated coverage of the stock with a sell rating and a 12-month price target of $42 a share. Ward's price target implies a 39.1% downside from Monday's close of $69.01. Lyft shares traded down 2.6% at $67.22 in the pre-market. It priced its IPO Thursday evening at $72 a share. And our third story of the day gives us some color on the numbers we talked about earlier. It's from CNBC.com. U.S. core capital goods and durable goods orders drop in February. New orders for key U.S.-made capital goods unexpectedly fell in February, and shipments were unchanged, but data for January was revised slightly higher. The Commerce Department said on Tuesday orders for non-defense capital goods, excluding aircraft, a closely watched proxy for business spending plans, slipped 0.1%, pulled down by declining demand for machinery and computers and electronic products. Data for January was revised slightly up to show the so-called core capital goods orders increasing 0.9% instead of rising 0.8% as previously reported. And that, ladies and gentlemen, is news you can use for today, Tuesday, April 2nd, 2019. Your options news rundown. I'm Dan Passarelli. And those of you who attended our webinar the other day or simply have interest in trading earnings, make sure to visit our webpage that explains our earnings trading class that is available right now. The web address to go to is markettaker.com/total_earnings_domination. That's the name of the class, Total Earnings Domination. So that's market, like stock market, taker, like take something, so 2 T's in a row, markettaker.com/total_earnings_domination. Trade smart.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.